Hello, everyone. I'm going to provide you with some great stock information and stock advice, and hopefully, you will find this useful and help you with your investment plans. So, as you know, the market dropped significantly back in March in 2020 due to the COVID pandemic, and a lot of the companies, for no reason, have taken a big hit, like legitimate banks that are still working and operating and servicing clients. Enbridge, for example, providing gas lines and so on, have all been operating and providing services to people, but they got hammered due to the fact that we're going through COVID, and for no reason, because it's not about their performance, it's not about their assets and investments, but surely they are impacted slightly by the pandemic. But these organizations that I'm talking about today were hammered for other reasons. Anyway, so there's been a huge hit on these companies, and I'm predicting after all the vaccines are rolled out by the end of summer, all across everybody who needs to be vaccinated, hopefully will be vaccinated, and there's no delays in delivery. These companies should be back to their old price levels and generating profit. So right now, markets are going to go through a little bit of a bumpy ride until the vaccines are completely rolled out and face some challenges. But I'm surely going to give you advice on three stocks that are going to provide you with good returns. So if you keep your money parked in bank accounts right now, you're earning next to nothing in terms of interest. They're paying you like 0.2% interest in some banks. All of them are paying under 1%. And with the bank fees and all other service charges, you're probably going to be in a negative position. So here are my three top advice, and if you follow that, you should secure your finances. First is have you maximize your tax-free savings account with a limit of $6,000 available to you. I would ensure that you maximize it annually. And if you haven't done it in the past years, you are allowed to go back and invest and put into the account backtracking, okay? Same with the maximizing your RRSP, so Registered Retirement Savings Plan. You should be maximizing, it's close to about 18% of your income that you can put towards retirement, and you should maximize the maximum amount that you're allowed to contribute to your tax forms. When you fill it out, you will know about it. And thirdly, if you have children, you should ensure that you're investing in registered education savings plan, and government tops up with a 20% return right off the bat. If they go to school, they get the 20%. And finally, if you have children over 18 years of age, they should all have a tax-free savings account. This is a place to park money, $6,000 max, and generate income, invest in stocks, buy, sell. Nothing is taxed in these accounts that I mentioned to you. So you should surely take advantage of this and utilize it and maximize your investment in them, because banks are not paying you anything if you keep it in the bank account. I'm not being paid by any financial institution or any investment firms to give you advice. So I'm doing this as a favor to you, just for fun, as well as keeping you informed, help you invest and generate money. And people are making money. I will not give you any recommendation on stocks that are risky. These are blue chip name brand stocks. My goal is not to take any risk with your investments and lose your money. So these companies will definitely get you a return back. If there's a bumpy ride, they will have some dividend paying out that will cover you over and above what your bank pays you. So you can earn anywhere from about 4.36% on TD Bank that I'll recommend to 5.28 on Bank of Nova Scotia and 7.8% on Enbridge. So companies like Nortel, JDS, and Enron have gone bankrupt. They were big companies, but senior managers screwed up the whole organization and bankrupted those companies. But that's my qualifier, is that there's always a possibility, but these are name brand companies, so you should do well and get a good return on your investment. So I'm going to start giving you the information. So here I'm going to talk to you about three stocks, all Canadian. So BNS, Bank of Nova Scotia, TD symbol, Toronto Dominion Bank, and ENB symbol, Enbridge Canada. So let's look at Bank of Nova Scotia. So here it's currently priced at 68.20. It went down by 96 cents on Friday. So if you look at it a year ago, well, not a year ago, March, when the pandemic started, you can see that the stock was close to about $75 and it's down to 68.20. So it's almost a 10% down in the stock value. So if things all get back to normal, this stock should go back to its price of $75. So that's a 10% increase. And as you can see here, there is dividends being paid at 5.28%. So here's what I mean by just putting it into the stock and keeping it in the bank account where you get next to nothing at 0%. If the stock goes up, down, whatever, or stays still for the next year, you will at least earn 5.28% interest, a dividend, kind of like an interest. So with the 5% dividend and the 10% stock price difference, you're looking at a 15% growth. So a stock that is 6,820 that you, let's say you bought 100 shares for 6,820, so it's 68.20 a share. A 15% return on this would be close to $1,000. So let's say you're putting 7,000 down and you're getting $1,000 in 1 year's time. That's pretty good return for you. Stock number 2 that I'm going to show you. So that's just general overview. So you can do a lot more research on it using Yahoo or any, if you have a TD Bank, what do you call it, stock account, TD Waterhouse trading account, or any other bank's trading account. You can research all these companies and it has a lot more information, including a stock analyst rating, which will tell you what they think of the stock. And I'm sure when you look it up, it's highly rated. It's the Schedule A, one of Schedule A banks in Canada, and it's one of the top banks, and it's lower price of all the other banks. The price of the share is much lower than all the other banks in Canada. So, and it's gone down and hasn't come back up for a while, but I'm sure it'll go back to the $75 rate. So this one is Toronto Dominion Bank. It's a Schedule A, one of the top 6 in Canada, and has businesses in Canada and US. And they're both individual, personal, and commercial bankers. So this one, the stock price is $72.46. It was slightly bigger back in March, so it was about, 76 almost. Not a huge, like it's climbed back up, as you can see from the old days, right back up to now. It almost went back to its current, the March pricing. So this one is not going to, I mean, it's going to continue to grow, and it's a solid company, and will be generating profits and providing you with return. This provides a 4.36% return on your investment with the dividend yield of 4.36%. So when you compare it to Bank of Nova Scotia, if you just use only the price drop and the dividend forward, it's going to bring you less in return, but it's a very solid number 1 bank in Canada in terms of assets. So I would be very much interested in holding on to this one. The last one I'll talk about is Enbridge, enb.to in this sort of Yahoo's search engine. So here is So stock number 2 that I like to recommend is Toronto Dominion Bank, symbol TD. And they actually didn't, they did get hit back in March, but they have climbed back up to close to that price. They're still short by about $3. So there's a $3 gain there. Plus you get a 4.36% dividend return. So that's a good return. So you park your money here. Worst case scenario, if the stock doesn't move anywhere, at least you get 4.36%. And hopefully it'll go back to its pre-pandemic price of $75. So there's about, $3.50. So $2.50, sorry, that's available to gain, maybe $3. So $3 plus, which is about close to 4%, and another 4.36% of dividend, you have a good return. And this is a solid company. It'll continue to grow when all this pandemic stuff is over with. All right, so thank you. So the last stock that I'm going to recommend right now is Enbridge, which is the gas and pipeline business. It's an infrastructure business to run gas to your homes. It's done in Canada and US. So if you look at the stock, it's at 42.96 right now and came down on Friday by 0.63. Before pandemic crash, it was around $56. So there's a roughly a $14 difference, price drop. So that's quite significant. So if you take that and let's say it goes back to its original price in a year's time when things get back to normal. But these guys, their business is one of those like the two banks, they're solid and they're going to be there for a long time providing gas services to everybody. So, and look at their dividend, it's quite high. And I think they've been very solid at paying out dividends and they should be able to pay this out. They're at 7.77, so almost 8% return on this. And it's almost a 20% price drop here. So if you add the two together, you could technically get close to 25 to 30% return on the stock. This may be a little risky in terms of dividends. We hope they continue to pay it, but COVID times, you don't know what may happen. But it'll surely go back to the price it was before. So I would look at putting this and parking it. So the 3 stocks that I recommended, if you put it into your TFSA, every time you make capital gains, there are no taxes from government. So government doesn't look at your account here at all. You don't have to report this. If you keep it in TSFA, in your RESP, so in RRSP. So all those 3 accounts will not be charging you any sort of taxes. Okay, thank you. So I'm just going to conclude quickly and say I provide you with 3 different stocks. I can tell you check in a year's time that all of these stocks would have gone back to their prior pre-crash levels at least, and still paying you a dividend of anywhere from 4.36 on the TD to 5.28 on the BNS and 7.8% on the Enbridge. So solid growth, solid companies, and good return for you at the end in investing in these companies. Okay, and I'll continue to provide you with other useful information in terms of, I'm going to try to keep it to 3 stocks at a time so I don't inundate you with too much information. So hopefully that was helpful. If you like it, please subscribe to my channel, as well as any feedback and any requests for other stocks of interest, let me know. But I'm going to stick mostly to providing information about name brand stocks, blue chip types, and don't want to give you any advice about any risky ventures that make you lose money. Okay.